Hey guys, welcome to another Trade Genius podcast. We're going to talk about the auto industry here. If you're thinking about buying a car or maybe a used car, you're going to want to hear this because we think there's some significant changes ahead and it's really going to affect the pricing of these vehicles going forward. So let's dive in.
Trade Genius.
All right, Bob, you've been digging into the auto numbers. What's going on?
Yeah, so Phil, what we have here is that we have an auto market that is, I think, in controlled demolition here. So new car prices are so high nobody can afford it. Interest rates are so high that nobody can qualify. The used car market is saturated, but they're not lowering prices, so sales are imploding. And now we're seeing the next step involved here, and you're looking at Ford Motor Company now going to, they basically say they're overstaffed by 25% in their engineering department. Now, I don't know about you, but starting to cut your engineering staff is like cutting your own throat. It's like a software company cutting programmers. And I think it's just the next logical conclusion that companies are now expecting prices and sales to continue to be bearish. And so I wouldn't be surprised to see GM come out next. You saw what Tesla's doing. They're doing everything they can to move Teslas off the lot. But I think it's too little too late. This is going to be now the third major primary industry in the United States that they're going to destroy with these higher rates. And, we had the housing market, we had the mortgage market, and now we have the builders and now the automakers. So this is profound because there's so many suppliers. I think 20% of our GDP comes from the auto industry. So it's going to be a big problem.
All right, and then you had shown me a chart on the money supply, I believe it is. Could you? How does that play into all this?
Yeah, for everybody who thinks that we have a new bull market coming, this is not what bull markets look like. This is what a hangover from an inflationary surge from the Fed and from the fiscal authorities look like. And stock prices have no choice but to follow this down, And so as the Fed keeps reducing its assets, stock markets are one-for-one correlation with the asset base. And with now you have the destruction of, basically this is money creation being destroyed, Phil. And by destroying money creation, you're destroying another industry, basically the financial industry and the banks and everything associated with that. So this is like I feel like I'm in a movie that I know where the end is, and I can't get to that point quite yet. It's like they just keep trying to hold it. And I think when this thing finally goes, it's going to be the move's going to be massive and quick, and it's going to catch the Fed behind the curve. And I think people are going to be really shocked because they've been told, and they're going to be told again tonight, how great everything is. And I think it's a disservice to people, and that's why, at least I am, and I believe you are too, basically cautioning people to get either hedged or get cash or to lower your speculative fever, because I think it's going to become a problem.
Yeah, it's hard to, when everybody's full bull, to be out there saying, look, it's pretty dangerous here because all they see is bullish reactions from the market. But I think this isn't even the necessarily the liquidity supply. This is just the rate of change. So they've turned the spigot off, in other words. So this leads. Next thing will be the reduction of all that supply and the reduction of all that liquidity that we've been showing you, which is telling us too that everything's way over its skis here. So I think, got State of the Union tonight, right? And I think, a lot of times if they're going to pull this market back, a lot of times you'll see that after such an event like that. Powell spoke again today. The market really unstable, I think is the best way to put it. Just drastic swings up, down, up, down. So what we're seeing as far as price stability, there is no price stability here, which the Fed, hangs their hat on, that their mandate is job stability, price stability. Jobs is hot. That's inflationary pressures. And I have a feeling too, Bob, that I think the inflation report might come in hot, and I think they might know that. And so they might be okay with the market kind of levitating here, because better to dump from 4,000, 4,100 than from 3,800, right? So it gives the little more breathing room as far as the market draw down, and the market draws down, things get a little more sketchy, and they get more pressure to pause, and they don't really want to pause. They want to keep the foot on the gas pedal for rate hikes going into the end
and look,
of the year.
There's another tell here that maybe we'll flash the chart tomorrow, but I'll mention it today. Is that you ever see that Navy SEAL boot camp that they do when they're qualifying, and those guys have their hands tied behind their back and their legs tied, and they got to keep bouncing off the pool bottom to get air. Well, that's essentially what the market's been doing here for the last 13 trading days. Every day at the open, they pump the market because of the options activity. And overnight, they're quietly selling. And you and I both know is smart money trades overnight, dumb money trades during the day. And I think, when I say where, I mean the dumb money retail, that would include me, because I'm not an insider, nor do I have size, is that I'm basically being played here for exit liquidity. Right. And I think it's a problem, and people need to understand what is happening here. Everybody just looks at what's obvious to them, but they don't see what's really happening behind the scenes. And I think it's going to really shock people.
Yep, I agree. So I guess we'll see what happens after the State of the Union today or tonight. And as we kind of go into the rest of the week, liquidity is down. We'll see what the liquidity update is on Thursday evening. My guess is the trend will be down. And then we'll see next week will be the big event with the CPI number, which I think will be extremely volatile. And I think we're going to have resolution from there going into the rest of the month of February.
Agreed.
All right. Well, thanks, guys, for watching. Please hit like and subscribe. And please ring that notification bell, too. That's really important to YouTube and the algos, and helps us get that viewership count up so that we can keep bringing this stuff to you. So we'll see you on the next one. Take care.
Great. Thank you.
Trade Genius.